Taiwan index as of now is down 1.3%.
There have been divergent views on whether or not spectrum for satellite communications is to be allocated or is to be auctioned.
We need to take out the previous high, which is 25,234, before we talk about higher levels.
So will the street buy into that commentary? That's going to be very important because there were shots that got into the system.
My bet is on tower companies. There are a couple of them which are very efficient, which focus on BSNL.
25,020 on the Nifty. The Bank Nifty is down about 0.25%, 51,787.
Growth for the full year FY25 should be in the range of 18 to 20%.
This option rationalization and ticket size change is would not be an instrumental to change in platform.
We said, okay, we're going to double down here because we have the talent, we have the scale aspect.
Another quiet session for markets, at least the morning has been.
Focusing on earnings, we're expecting strong earnings growth both sequentially and year-on-year.
In spite of a revenue growing 2.3% odds, our actually costs grew less than 1%.
Another down day for our own markets. This is in line with what was expected.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is a day so far, and I must say, as we say hello and welcome to you, market has turned into the green. For the first time since, I think, 10:30 in the morning, the Nifty is back in the green. We're up about, down 1.2 point, but we did hit green territory. This is Closing Bell, last hour coming up from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema, Surabhi here in the studios, and Nigel from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. The low today was 24,900. So that recovery that you're talking about is about 150 points from lows now.
Yeah, but I guess from the lows and the highs, the band is just 200 points. So the day so far is not leaving us any wiser in terms of who's winning the race, the bulls or the bears, right?
Well, that's right. But the big boy has woken up, right? Reliance Industries. Just take a look at that stock. It's underperformed for the last 6 months or so. But intraday, big recovery from the low point of the day. And that seems to be the one that's fighting for the bulls as we speak.
That basically means that the Nifty is up 150 points from the day's low, 24,900, and we're at 25,050. So clean 150 points is what that recovery translates to. The Reliance, of course, is adding 30 points to the Nifty on the positive side. But HDFC Bank is also adding about 30 index points. And the others are Bharti Airtel and HDFC Life. Life is minor, about 4 points or so. Bharti is adding about 11 index points at this point in time. So that's essentially what's going on. Just a quick look at the Nifty Bank as well. It's absolutely flat. It's not really gone anywhere, but direction has been slightly weakish. I mean, it's been sideways through the course of the session. You look at the broader market breadth, it was clean negative at one point, but it's turned now. And you got about 1360 stocks higher and 1350 stocks which are lower. So this is as flat or advanced decline ratio as it gets. Nearly 1:1 to the last sort of stock out there. 10 stocks separating, at least on my screen, a number which are up and numbers which are down. Reema.
So taking stock of the day so far, so auto is the top Nifty loser for the second day in a row. So auto index is down 1%. And here it's M&M and Hero Motor Corp with cuts of nearly about 2%. The top Nifty loser is Trent, so 3.5% gone. In fact, this entire week, Trent has been under pressure and the sluggishness on Titan continues, so Titan down another 1%. IT2 on the back foot, so Infosys ahead of numbers tomorrow has lost nearly 1%. On the way up, HDFC Bank has been doing well since the start of trade. Reliance Industries, we've been talking about it, that's had a late move. HDFC Life, the top Nifty gainer on the back of the growth guidance being upgraded. And then you've got a couple of other names like Dr. Reddy's, Grasim, Bharti Airtel too. There is an HSBC upgrade. They've raised the target price. So Bharti Airtel too, higher in trade.
Let's not allow the mid-cap index level to fool us or even the advanced decline ratio to fool us, because you'd imagine that it's absolutely even, Steven, nothing is happening. But, the action in the broader market is actually, there's a lot beneath the surface. For starters, look at AMC stocks. Yesterday it was about insurance companies, big moves in those stocks happening. Today it's about AMCs. HDFC AMC 6.5%. Aditya Birla Sun Life AMC 13%. UTI AMC 6%. So one clear theme is that there's money moving to the asset managers. The other interesting stock is actually again from the Aditya Birla Group. I'm talking about AB Real Estate, the erstwhile Century Textiles, that they've gone through a brand makeover, image change, name change. But it's a business that really seems to be fired up with a lot of launches. Some of them very close to where we are, near our offices right here in Worli. That's a stock that's up about 7-odd%. Even other names, there's Thyrocare, there's Gopal Snacks, Rallis is up 15% on results. So yeah, let's not go by the index. There's a lot going on at the individual stock level. Nigel?
Well, that's right. And the top gainer on the Nifty today is HDFC Life. And that's the point we made earlier today. Was the street a little bit too, bearish on the stock by the end of yesterday's trading session? Management came out. They said that things are pretty much, on course. AP growth of 18 to 20%. The margins, they believe, was hit because of a couple of factors like a higher share of ULIP, as well as those price increases got a little bit delayed. And the street has bought into that. And that's why you had a couple of brokerages, namely CLSA as well. They were quite optimistic on the prospects of the company with a target price of 805 rupees per share. Well, let's find out how to trade the index from here. Mitesh hasn't been very, very positive on the index. Mitesh, tell us what's your call now on the Nifty and the Nifty Bank. For the time being, we're as flat as can be. But both yesterday as well as today, we recovered more than 100 points in the day's low.
Good afternoon, Nigel. So, I haven't been positive, but I also maintain that we are going through a contraction kind of a phase. The next expansion will come once we move out of this range, and on the upside is about 25,300. The downside is about 24,800 and 24,750 zone. So give and take 50 points. I think that's the broad range which I think the markets will do. As of now, on the hourly and the 2-hourly charts, the contraction signals are still there. We are not turning away. So I believe that next few days could well be within this range. And there is some downside because the weekly indicator is turning down. So if you break 24,800, 750, we might have a slightly stronger correction. But for the timing on an immediate hourly, 2-hourly chart basis, I think it looks like we are, just going into a sideways consolidation. So we have, last couple of days, we have avoided trading the index, and that's how we are approaching things. We are very, very stock specific. In fact, somebody was talking about the AMC companies into focus. I think it was Survey, and UTI AMC is one of our recommendations. I would recommend to buy here with a stop below 1280. Look at targets in excess of 1400 on the upside. And the second stock which I like is HPCL, which I would recommend buying with a stop at 425 for targets of 455.
Okay, HPCL is doing well as well. Yeah, absolutely. Mitesh, thank you for that. Aditya Birla AMC is the other one, which is up 13%. Now that's been an underperformer, relative underperformer. It's been a good year, but over long periods, it's not really done very much. Was at about 730 or so in 2021. It's now at about 790. So it's had a few years where it's not really done very much. But this year, up 70%, and a big move today as well. All right, well, let's talk about capital market plays and stick with that space. So we spoke with the CEO, MD and CEO at BSC, and Mr. Ramamurthy, and we sort of touched upon basically 2 or 3 things. One, will overall market volumes fall? By how much? Second, will BSC gain market share? And 3, what are BSC's plans and aims and ambitions to increase its product offering? Listen in.
Yeah, I feel that number of days that have gone post the changes are very minimal to assess a trend. There have been quite a few changes that have come in. So it is too early, in my opinion, to say that this SEBI requirement has brought in these type of changes. The volumes in the last 3-4 days have been lower in derivatives market. It could be for very many reasons. So to give a trend based on this is happening, I think it is a bit too early. We may have to wait and watch. We track our success not based on market share. If you ask me, what were the number of market participants last year, what it is this year, what you are planning to have next year, I'll be able to give you a number. That's how we track our success. We started with 8, we went to 250, we went to 350, today we are talking about 450. Our target is at least 600 brokers should be participating in BSE's derivatives segment. We started with no FPIs. Today we are at around 110 FPIs. We feel that at some point of time we should reach to a number of 500 FPIs. Today we started with no product. We had one product. Now we are talking about two products. At some point of time we should have at least a couple of products.
Okay, that was the BSE talking about the impact of the change in the F&O norms. Today, incidentally, we also caught up with Mr. Dinesh Thakkar, the chairman and managing director of Angel One, who says that Angel does not see too much of impact from the shift to the true-to label fee structure. However, he does expect a 20 to 22% drop in F&O volumes at a market-wide level. And because of this, the impact for Angel in terms of revenue, because of the F&O regulations, that could be as high as 14%. Take a look.
Saying a label, because we have done few changes in cash delivery, and we have started charging on non-cash collateral which customer provide. We charge interest on that. I don't agree that volume would be so drastically lower, because based on kind of an analysis that we have done, total impact on our net income would be in the range of 13 to 14%. But when we come to drop in F&O volume, my estimate would be drop would not be more than around 20 to 22% maximum.
All right, so that was Dinesh Thakkar earlier. You know, we actually brought up this question on the shift in trading preferences. Now both exchanges will have only one product. The Nifty, the NSE will have the Nifty expiry. The Bombay Stock Exchange will have the Sensex expiry. Will this still mean a shift in more volumes towards the BSE? That's the question, that's the debate. We have Prakash Diwan joining in. Prakash, the stock BSE has rallied big time in that anticipation, right? You don't have 4-5 different products from the NSE. You have one Nifty now. So whether this will mean better business gains as people shift to the Sensex. What do you think? Mr. Thakkar was of the opinion that preferences don't change that quickly. Where do you stand on the debate?
Good afternoon, Surbhi. So, yeah, I mean, I do understand that NSE actually has lost out on the potential business opportunity because the number of contracts has come down. BSE marginally would have had some impact, but not necessarily very big. So from that perspective, BSE hasn't lost much because of the change in regulation, or could potentially not lose much. But, you know, there is this whole propensity to look for day trades and intraday trades and short-term trades. And that's where a lot of penny stocks get picked by retail investors. So people who find contracts out of reach, or, you know, the variability of contracts not sufficient enough for them to take a wager, you would have people wanting to get into penny stocks for sure at some point in time. And we've already started seeing the demand for penny stocks go up. Whether that translates into a behavioral change is yet to be seen. So as you rightly said, it's not something which will happen immediately. But the element of seeking to do short-term trading is very strong in the market even now. So if
no, Prakash,
something else will fill that gap.
No, so the question that we were trying to sort of wrap our heads around is, assume that I'm a trader, and for the sake of simplicity, I'm spending 100 rupees trading different products through the week, right? Till now, I could do a Nifty expiry, weekly expiry, then a Bank Nifty expiry, the Financial Services Index, that expiry. I was playing 4 or 5 different products, spreading my 100 rupees across 5 products or 4 products, right? Now I can do only one with the National Stock Exchange. So will the remaining money that I'm left with, will that go to the Sensex as the other expiry? Or will I simply double up my position on the Nifty? And, you know, the benefit remains with the National Stock Exchange in that case.
Okay. So, no, let me make a slight change in that hypothesis. If I had 100 rupees and if I were a trader, I actually chose to use that same 100 rupees every day to participate in some weekly expiry. So it wasn't spread out over 4, which means that it wasn't like 25 bucks each. It was that same 100 that was getting used. In between now, between let's say the Sensex and the Nifty expiry days, the traders will look for other things, and that's what I was trying to explain. Could probably be those penny stocks and smaller stocks. So it's more of a short-term trade, objective. How they do it, what they use is yet to be seen. But that's what I meant. So I don't think there's going to be a very major change. I mean, Mr. Thakkar already said 14%, 13-14% is a impact on revenue, which is significant enough. If that gets digested, then life will go on as normal. So I think another month or so, and we'll probably not be discussing this anymore.
I really hope so. I'll just give you an anecdote, folks. I was with an elderly gentleman a couple of days back, a gentleman who's beyond 60. He's talking about a group of other retired gentlemen like him who were only into options trading. I mean, they say mutual funds is okay. That's separate. But F&O is a new hot thing. So I don't know. I think the whole regulation is aimed at exactly this strata, right? Whether it's effective or not, I think we'll have to wait and watch. Whether it's the have money, will trade psyche, whether that changes or not with the new
Were they making money?
Sorry?
Were they making money, did you ask? Or
I think at that time they politely wanted to change the subject.
Yeah. All right, let's move on and talk about other stocks. Now, Railtel is surging in trade on the back of a new order from MHADA. Vinny is here with the significance of this order. Vinny.
So absolutely, what's interesting is that Realty has been winning these orders, especially in the last 1 month. After it's received its Navratna status, it has received a lot more orders because it becomes an ease in terms of this post the status, because the company has been able to give an outstanding performance that is given by the government. So a thumbs up coming in from the government, at least when they receive the Navratna status. Now talking about the order specifically that they received yesterday, it's a 79 crore order, and this is from MHADA. They will be using this to set up, migrate and manage the data centers for MHADA, and disaster recovery is also something they'll be focusing on. Last 1 month, they've received almost 6 orders, and all of them are ranging, somewhere between about that 50 orders is now going to be the key. But today, the stock is surely buzzing in trade, and higher levels in the last 2 years. When you look at it, the stock has already run up 300%. Last 1 year, 100% uptick, and order consistency is something that we're keeping an eye out on.
Thank you very much for that. That's Railtel. Prakash, I wanted to get your view in on Rallis India. Now, numbers are good, like a steady set of numbers, 11% higher. It's just after 6-7 quarters of muted numbers. This time, you are seeing some, positive numbers from Rallis, and the stock has moved up 17%. It's just that in those 7-8 quarters, when the numbers were muted, it's not that the stock didn't perform. Year to date, the stock is up 50%. In the last 1 year, it's up 71%. What does one do with Rallis India now?
So, Rima, I think Rallis, the move in Rallis in terms of the business numbers is actually representative of this entire sector that's likely to undergo this change. And I'll tell you why I believe so. Brazil is coming into its crop cycle now. I mean, it is exactly reverse of what India goes through. And there is a huge element of, expectation or anticipation that a lot of new agrochemical molecules will be put to use, not the older ones, because the chase for yield is so severe. They have a lot more to catch up in terms of their food accumulation targets and all. So what's going to happen is the government is supporting that. There's wide acceptance of the usage of agrochemicals of a very high range. The number of SKUs which are getting sold is far more now. And I can tell you, I mentioned this about 2 weeks back, that if you look at a Sumitomo or a Rallis or a Bayer, these are the names that have a very, very strong, robust library which could benefit. And that's something which has already started happening in terms of restocking. I think this is a secular trend. If you had to buy Rallis, if you haven't participated in yet, at lower levels, even now the momentum is in your favor. So you will see this happen to a lot of marquee names. Rallis, of course, offers you that comfort in terms of valuation as well.
Okay, all right. Hi, Prakash. What about Railtel? I missed your view on that. Vinny detailed, all the good news that's coming in there with regard to that order win. But your view on the stock, it's up 8%.
Yes, so, what's happening, Nigel? Railtel has started getting recognized and accepted as a service provider on a lot of the telecom and data center solutions. It's no more only doing work around the railway. I mean, it has participated in everything that the railway needs in telecom spaces because of its fiber optic network, which has been there for a long time. It's just that now everybody is recognizing and putting that to use because it's become very high in terms of the value chain that they participate in. Earlier, they were just providing a network. Now they're going ahead and doing multiple things in terms of forward integration. So you can imagine this is not a metro from Bangalore that's given an order. This is MHADA, which has got nothing to do with railways, but still it's the capabilities that have got functionalized. I can tell you one thing. This is while the orders are 79, 80 crores is small one-off in terms of what benefits it accrues, but over a period of time, once they have order book which is robust enough, there'll be a lot of recurring revenue that will start percolating down to the P&L, and that's actually going to change the dimension of what this business looks like. I think it has legs. It's run up quite a bit because of this catch up in terms of its capabilities, but I think it could still continue growing at 20-22% CAGR for the next 3 years. Now, how soon the stock price reflects that, I really wouldn't know, but at least the business growth is very clearly evident from Railtel.
Okay, all right. Prakash, thank you very much for joining in. Good having you on and getting all of that perspective today. We do have to take a break, but when we come back, we'll have Vinay Jaisingh of JM Financial joining in with some more market thoughts. Back with that in just a moment.
Welcome back. Now, HDFC AMC shares have surged about 6.5%, and it's a new record high for HDFC AMC. The trigger is Q2 earnings were strong and ahead of street expectations. In fact, it's pulled up the other AMC companies too. So UTI AMC is up 7%. Nippon is up close to about 3%. So Vamakshi joins in to tell us more about HDFC AMC's numbers, what brokerages are saying, and a quick valuation comparison of all the listed players now. Vamakshi.
Well, Rima, HDFC AMC is definitely having a stellar run in the trading session today after the company reported a strong set of numbers in the second quarter. Additionally, the management also shared positive commentary on the company's future outlook. Brokerages in response have raised their target price as well as their estimates for this counter. Jefferies has retained a buy and raised its target price to 5,450 per share. They are expecting 24% CAGR in AUM from FY24 to 27, driven by higher growth in equity AUM. They've also raised their EPS estimates by around 4 to 8%. CLSA, on the other hand, has also upgraded its rating on this counter to outperform. They've raised their target price to 4,920 rupees. They've raised their FY25 AUM growth expectations to 29%. They've lifted the EPS estimates by 5 to 9% over the next 2 years. However, on the other hand, Citi has a different call. They have a sell rating on this counter, and that is mainly being driven by the rich valuations. So I had a look at how all of these companies stack up as far as valuations are concerned. When you look at the returns that all of these companies have posted on a year-to-date basis, we've seen a significant re-rating in all of these counters. We are seeing gains anywhere between 50% to 70%. Resultantly, HDFC AMC, the price to earnings basis, the FY25 estimate stands at 43 times. Nippon Life AMC2 is trading at elevated valuations of 36 times. ABSL AMC, that is Aditya Birla Sun Life AMC, is slightly reasonable at 25 times, but UTI AMC is trading at the lowest valuation possible, that is at 21 times. And keep in mind that when we compare all of these valuations to the 5-year average, for most of these companies it is above their 5-year average, but UTI AMC is trading at the 5-year average mark.
All right, Vamakshi, thank you very much for that. Vinay Jaisingh is now joining us. He's Managing Director and Head of Portfolio Management Services at JM Financial Services. Vinay, good afternoon. Good to have you with us here. Thank you very much for joining us. AMCs, right? I mean, lesser, I think out of everything in the capital market space, maybe the least spoken about sector. We speak about exchanges all the time because I guess there's only one, and stocks done so well. Brokers occasionally, yes, but AMCs is kind of not a cool, is not seen as a cool space. Do you own any, and what are your thoughts here?
So we've been nibbling in, a couple of AMCs, but the thought is pretty simple. If India is witnessing a $35 billion equity inflow from DIIs from April 1st, which implies in 6 months you've added as much as you have ever added in a year as a whole. So the inflows to the equity market is fantastic from DIIs. You add to that, between 11 and 25%, the market, the larger cap have moved by 11 to 12%. The smaller caps have moved between 25 and 30%. So you add to that the mark-to-market amount to the AMCs. So they've had a fantastic 6 months. The entire basket would have grown far more than what you and I would have estimated 6 months ago. It was difficult to decipher either the inflows or the quality of movement in the market this year as well as less. So the base is a lot more higher. Where we are pondering on to the point for the AMCs, and especially the larger cap, is when global AMCs are available at half the valuation, how long is this liquidity growth rally going to last? And if the answer is long enough, then these stocks augur a very serious look.
Hi Vinay, good afternoon. Good to see you, Vin. What about stock exchanges?
As far as stock exchanges are concerned, there's one and one unlisted one. So as far as stock exchanges are concerned, I think you've seen the good run for BSE happened. Now, the story of what's happening on the option market and how the volumes come off, are seeming to be correcting, which means basically if, let's say, earlier analyst Pooja had an EPS for FY26 for, let's say, a BSE at somewhere close to 102 to 104. That number has to correct down by 5 to 2%, and the stocks had a healthy run. So technically, we are not buying more of the exchanges currently and looking at opportunities to probably trim down some of them.
Vinay, afternoon. Rima here. There are two key concerns which are emerging for India according to you. One of them is slowdown in the credit growth rate, and two, earnings downgrades for the near term on account of lower consumption. So how are you positioning your portfolio for this eventuality, possible eventuality?
Sure, thank you. So first is we are underweight the financial sector because we're seeing a slowdown on the credit growth rate. Second, we are underweight in IT, again for the same reason. Having said that, what we're looking at is what do we buy where we can see growth? The first space where we are going overweight is the pharmaceutical space, where we've gone overweight substantially. The second is industrials and cap goods. So these two spaces are where we are putting our longer term bets on, and we're taking it out from the financial and the IT and maybe a little bit of the consumption space as well. So that's how we are weighing ourselves. By putting more weight on the pharmaceutical space, we're also playing the Make in India story, because lots of the pharmaceutical companies we like are CDMOs, not just for domestic but also looking at global markets. So we are taking the pie of what if the dollar were to appreciate into that basket as well.
Vinay, we have this IPO that's going to be opening up in the next few days from the Vare Group. And suddenly this renewable energy space is getting a lot of attention. And there are various ways to play it. Solar modules, solar cells as well. We had Premier Energy that listed, in fact, blockbuster listing over there. How are you all approaching this theme? You had an SME company that went up 100 times, I think, in the last 3-4 years. And they as well raised some money. So how do you all play this theme? Power as well as energy, renewable energy mix.
Exactly. So in the capital goods and industrial part, virtually half our weightage is in the power sector, because we think India is, net deficit power. You're going to see as much as the capacity power has today coming up in the next 5 years, and about 70 to 80% of that, maybe 350 odd gigawatts would be coming up in, or maybe 400 would be coming up in clean energy. So for us, there are companies like Tata Power, NTPC, which give you both the plays. If you look at simple companies like Tata Power, at one end, people think it's a generating company, it's a coal, hydel generating company. But if you see the incremental capacity which Tata Power is getting, it's largely in clean energy. Second, technically, Tata Power today has more capacity in solar modules and cells than even Premier Energy. If you were to put the valuation of a Premier Energy into Tata Power, you're getting a large cap at, I would say somewhere between 15 and 17 times 1 year forward earnings, much lower than its historic past. So, that's the way you're looking at it, Tata Power. Similarly for NTPC, the same story, but here you're getting a cub which will get listed sooner than later in NTPC Green as well. Having said that, we're also looking at the players who are going to provide equipment to the power companies, be it Inox Wind and Energy, or be it Sterling and Wilson, which had stellar results which came out. So we are nibbling on to these names, but power for us is a very big, weightage, 15 to 16% in our overall portfolio in ND.
Okay, by the way, look at the market. It's suddenly taken a bit of a knock. We are down 75 points. Remember, we started the show, there was some green on the screen, but there's a lot of volatility on the screen as well today. And the Nifty has again dipped below the 25,000 mark. That's the decline that I'm talking about. So 230 we were in green, and suddenly the dip is back on. Among the stocks, there are big losers. Trent stands out on the Nifty. Trent is actually the weakest stock on the Nifty this afternoon, almost a 4% cut. And then you have some auto names like M&M and Hero Moto as well. So that's the market right now. Vinay, hi, good afternoon. Great to have you on. So my question to you is really on consumer. And what are you doing? Because there are too many moving parts, right? There are the likes of Trent. They've gone on and created maximum wealth this year. Then you have this whole lab-grown diamonds issue, which has been an overhang of sorts on Titan. You have the snack makers. These are, of course, mid-cap names like Gopal and Pratap, and suddenly they're getting very active. Traditional FMCG companies like Dabur are sounding worried about quick commerce. So there's too much going on in consumer. Are you playing it at all? And if yes, in what way?
So, last year, if you'd asked us the question, the biggest, I think one of the biggest alphas we would have got apart from defense and railways would have come from Trent. We're still holding on to companies like Trent and even Varun. When they correct a bit, we start buying them, because the story of Trent is, India's biggest consumption player. And as you're aware, India is 60% all about consumption. Here, Trent is actually increasing its market size altogether, from being, a pure retailer to getting into lab-grown diamonds, as you put it, but, to also be getting into different skewed data as well, as far as people who are their consumers, be it the ultra-rich who can go to a Zara, or people going to a Zudio, or even people going to a Star Bazaar. So that's something why we think Trent, yes, it's corrected today, but if you see its run, it's been super healthy, YTD or in the last year or two. And that's something we will keep on holding on to and even nibbling, if the price corrects. Varun on the other side is, I would say Pepsi's second biggest bottler outside US. And the company is only increasing its footprint. The stock has had some kind of a correction, and they're looking at, some kind of fundraise for expansion. History shows us, whenever Varun has raised funds and done some kind of expansion, it's succeeded in improving its utilization rate. So these are the two names we like. Apart from that, we did like food names like Pikaji earlier, but incrementally at the current price, we're not buying them. We're using our incremental money, as I said, more in pharmaceutical, the power sector, or the even if it's in financials, it's in the housing or the insurance part of the space.
You have Bharti even in your portfolio, right? You own Bharti. Yeah, no, and so I'll ask you about this, but all the conversation on social media and otherwise has been about Starlink and what they may or may not be able to do here in India. So we actually decided to investigate a little bit about what exactly does Starlink want to do. Are they really going to be a competition for, incumbents, right? And local telecommunication players like Bharti, Voda, Reliance Jio, etc. And Rima, the short answer is no, right?
The short and the long answer both is no, for two reasons. One, because pricing in India is very cheap, right? Satellite communications, satellite technology is unlikely to be cheap enough to disrupt. So that's reason number one.
The terrestrial networks, on which we're running our 5G.
Exactly.
Okay.
So it's unlikely to be cheaper than that, right? Anything, if it has to disrupt in India, it's got to be on pricing. And secondly, it's unlikely to be even as fast as, forget 5G, even 4G. Okay. That's what the feedback is. So yeah, it perhaps.
There is, so I was talking to somebody who's done this on the technical side of things. There's also a technical reason that you can't use satellite tech through mobiles. You've seen those old Hollywood movies, right? Somebody hiding up in a hill, and they got a sat phone, and they got to go somewhere and find the connection, right? So you got to turn your phone right to wherever
the satellite.
So it's apparently so basically the basic difference I understood is that mobile phones only work at low frequency, whereas the satellite phones will work at very high frequency. That's the basic reason why. It's incompatible as far as technology is concerned.
So you can't use it to make your regular voice calls.
Yeah.
But you can use it, data will be available. So you will have your WhatsApp, and through WhatsApp you will be able to make your voice calls. But pure regular voice calls that we make, that is not possible with satellite communication. But the use case today, which is what Airtel has also been pitching, that this is complementary to your terrestrial network, which is why they have been asking for it to be administratively allocated. So if what is complementary, wherever terrestrial network cannot reach, which means on in the middle of the ocean, on air, or in very remote locations in the middle of the forest, so to help bridge India's digital divide, that's where you want to use satellite communication. So for instance, in the US, when the hurricane Milton hit Florida, all the terrestrial networks were down, and it's that time when Starlink can be used. It can also be used perhaps by larger corporations as a as a connectivity backup. So that's another, potential use case. But if you want, as Airtel clearly says, if you want to use it in for providing, mobile connectivity in urban areas, in metro, to retail consumers like you and me sitting in Mumbai, then you go out there and auction the spectrum. So it depends on the kind of use case.
Yeah, no, absolutely. And of course, the other one is fixed line, but fixed line is not a large user base in that sense. So, but as far as mobile is concerned, it's It's basically inefficient, let's put it that way. I don't know if you have any thoughts. By the way, Starlink is now, I was reading, it's got 7,000 satellites up in the air. That's about 75% of all active satellites. And they want to launch another, they want to send up another 10, 20,000 satellites more. Any thoughts, Virey? This is, of course...
You may want to try keeping one in your pocket or in your purse and see the weight of it. And you will start appreciating your mobiles all the more. So
you mean the sat phone?
The sat phone.
Absolutely. So, sometimes we forget the basics, right? The people who've, obviously Bharti and Jio have succeeded so substantially in India because one of the biggest reasons also is the cost of the handsets and the quality of the smartphones which you have. And that's something you should not undermine when you come up with an older technology, which was used, as you rightly said, in remote linkage areas where you cannot put up a wireline or a wireless radio network and where connectivity is a must. That's where even in India, you would use a Satcom. But if you want to use it among the masses, you need a big technology change in the costs of the handset, and more importantly, giving you the same features as, let's say, I'm not even talking about an iPhone, or a high-end Android, but even a 3G handset would give you, I think that's leaps and bounds away. So I wouldn't be as concerned of it as far as Bharti is concerned.
Starlink's ARPU apparently is $100. That's what, $8,000, right? Yeah. Oh, I don't know what Bharti is at, or...
$120 is what I read for Starlink. So yeah, 120 must be.
And locally, it would be what?
In India, it's about, Reliance Jio was at 195, 195 rupees. And Bharti is a little bit more at 220, 230.
So there you have it, right?
I mean, the aspiration of Sunil Bharti Mittal is that Airtel should hit 300 rupees, right?
And of course, there's that's just the what you pay to use, but there is also the cost of equipment on which Vinay was talking about. Vinay, thank you for joining us. Good speaking with you. And thank you for being here with us today. Well, let's take a quick commercial break here. We're going to come back, tell you what's happening in dealing rooms, Nimish is, and what Nimish is picking up in terms of stocks where there is action. Stay with us.
Welcome back. Some nervousness in the markets. We're down 80 points odd, but par for the course, one would say, because of the breadth of the market is still in favor of the number of stocks that are advancing. Good time to get in Nimesh, though. Nimesh, tell us, what are you picking up in terms of D-Street action?
Well, Nigel, for second day running, it looks like it's what happened yesterday as well. There is pressure in the large cap names, the Nifty names, so to speak, and at the same time, the broader markets are well bid by institutions. So the flow seems to be moving back to the broader market in mid-cap and small-cap stocks. At least that's the feedback that I'm picking up for the last couple of days, and that's the case today as well. Again, there's going to be there is small buying again, which has come back into the PSU names as well. So within the large cap names, is the PSUs. It seems to be a bit well bid. I think from a sector point of view, autos are a bit under pressure. Looks like a bit of profit booking, and so is the case with IT as well on the back of what we saw on Nasdaq last night. But again, broadly the feedback is the volumes are on the lower side. The retail participation has slowed down a lot in the last many days, is what is my sense is. And from an FI perspective, it's sell large caps and buy into the mid and small caps.
Oh, all right. Interesting. What about individual stocks, Nimesh?
Well, so in terms of individual names, the first stock is Ajmera Realty. A big move in the last couple of days. In fact, this week, the stock is up more than 25% and large volumes as well. I understand the company is likely to raise funds from some influential investors where preferential issue. The board meeting is scheduled for 18. So that's something to track in Ajmera Realty. The second name is HPCL. The OMC pack did well in the morning, but within that, HPCL stands out on back of very strong buy flow. So within the three OMCs, it's the HPCL which is well bid for the last couple of days, and that stands today as well. The third is a couple of crude plays, both Interglobe Aviation and Asian Paints. Both have seen delivery-based buying in today's market, and they're slightly buzzing as well. So again, looks like more of a proxy play to the falling crude prices. And the last is Persistent. The stock is under pressure. The entire IT is under pressure today, but Persistent stands out in terms of buying flows. So looks like at lower levels there is buying, and especially some long-only funds seem to be quite active buyers in Persistent at these levels.
Okay, thank you very much for that. Those are some stock buzz that Nimesh has picked up. Mitesh is now back with us for a few BTST calls. Mitesh.
I think, looking at the market, we'll go with a mix of buys and sells. On the selling side, I'll take a STVT on Infi. I think it's come off after hitting the earlier highs. Might see some more consolidation, and in that, it could head towards the lower end of the range. We'll keep a stop at about 1927. Look for a target of around 1905 to about 1900 on the downside over here. And the other stock which I like on the upside is Rallis Labs, which is a BTST with a stop at 476 for targets of 488.
Okay, all right. Mitesh, thank you very much for that. We'll take a quick commercial break here. There's 13 minutes to go to market close. Stay with us.
Welcome back. Well, the markets are seeing some bit of selling towards the end of trade today. The Nifty Bank is still doing a relative outperformance, but the Nifty is down close to under 100 points. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, who joins us on the show. Hi, Mayuresh. Good afternoon. Well, one stock that's moving against the trend is Welspun Corp. The stock actually had seen a sharp correction from the recent peak, and now it's pulled back, and on the technical charts as well as trading above its 20-day MA. I had a chat with the management. They were talking about their ductile pipes business doing well, oil and gas pipes finding demand, and Sensex could be the cherry on the cake which has come into their fold. Your view on the stock at 720 bucks?
Afternoon, Nigel. No, I think we remain positive and optimistic. I think specifically in terms of the DI business, the expectation hereby is that over the next few years, the 16,000 kilometer network that we probably got should get expanded to around 28,000 kilometers. So you've got a huge pipeline per se of 12,000 kilometers that probably is expected to get added. And that gives a huge incremental advantage in terms of the order flows. That can come Welspun Corp's way, Jindal Saw's way. I think both the managements have sounded very, very optimistic in terms of the order visibility in this segment itself. The second element also is the kind of expectations on the overseas business. Aramco is doing a huge amount of capex. You've seen a lot of the exploration companies in the US do expenses as far as their pipeline network is concerned. And obviously, as you mentioned, Sensex, where the expectations of market share gains over the next few quarters can be a reality. I think the market size is relatively small, but I think they can make some good gains here. So yeah, I have a positive view on Welspun.
Mayuresh, hi, afternoon. So at William O'Neill, say in the last 1 month or so, what are the big changes that you've made in your recommendations, either upgrades or downgrades? You want to take us through that?
Afternoon, Rima. Yes, I think one of the sectors is IT, where we've upgraded the sector as a whole, where our belief is that IT stocks should deliver, specifically on the Midcap IT part, in terms of constant currency, in terms of margin profile. And therefore, I think anybody who's holding Midcap IT stocks should continue holding. The second element that we are a little bit more selective about in terms of sectoral churn can be a few of these auto ang companies. Our own sense is that auto ancillaries will still continue doing a little bit better compared to the frontline auto stocks and this juncture. They obviously get the embedded advantage in terms of the replacement market, in terms of volumes, as well as pricing, which probably offsets some element of pain from the OEM players itself. So I think some burden that you're reflecting is something to continue liking. And very, very selective in terms of real estate and real estate ancillaries. Our take is that this sector will continue having a reasonable show as far as earnings is concerned. And therefore, urban smart spaces from the Realty players, their recent project Aqua in Ahmedabad has received a humongous response. They just released on the BSE exchange that 500 crores has been received in terms of rebookings, expected cash flows in excess of 2,000 odd crores, no debt on the balance sheet. So our own sense is that a bit of a mix of these domestic cyclicals might continue.
Okay. By the way, the cut on the market is now 96 points. So this will turn out to be a bit of a disappointing afternoon for the bulls. The 200-point band that we've traded in today, now the index, 6-7 minutes to go, is getting to the lower end, the lower edge of that band. Mayuresh, hi, afternoon. You know, we were just discussing the huge move in asset managers today. We don't see this often, but they're all moving in tandem, right? UTI, HDFC, AMC, Aditya Birla Sun Life, AMC. What's your sense? What's your take? How do valuations look? We all know the whole financialization story and, you know, the love for mutual funds. But in terms of just business and stock valuations now.
Afternoon, Survi. No, so again, I think reasonably placed. But if you probably peg out how the next 2 to 3 years are expected to play out, and if one probably expects the inflows as far as SIPs are concerned to continue, which seems to be the case as a base case scenario, I think you're expected to see reasonable amount of growth come through. You've obviously seen a lot of launches happening, Survi, for a lot of these players, both in terms of thematic or key launches that are happening as far as individual AMC stocks are concerned. And therefore, with the kind of liquidity that is sloshing around in the system, as these NFOs get a good response, the mix that gets tweaked in terms of their equity and debt holdings as a percentage of the overall AUM, and the expectations in terms of stability, in terms of the overall operating costs, to probably manage that. The operating costs will just go a tad bit higher. But if the volume growth is significantly higher, the expectation in terms of EBITDA and earnings expansion might be far stronger over the next few quarters. Valuation is a totally different ballgame altogether. I think valuations are a tad bit on the higher side, as I said. But again, I think if growth is expected to come through, maybe the market gives that amount of that little bit of element of those premium valuations. So yeah, HDFC AMC, UT AMC is something that we continue holding on to our global portfolios.
All right, well, we're at the low point of the day, but quite a few stocks are at the day's high. Godfrey Phillips was trading in the red just 5-10 minutes back. That's moved into the green. I'm looking at Karnataka Bank. That one as well has done a U-turn. So a few of these names should come up for you on the screen. Big U-turn is what we're seeing on these. And on the flip side, Oil India has come in for a pounding. That stock is now down close to around 7% as we speak. Big slide is what we're seeing in the last few minutes. Mayuresh, you want to come in on this one? Oil India, we know that pricing is weakish, crude oil prices. It danced away to 81, came back to around $74 per barrel. Your view on Oil India at around 520 rupees, if at all?
So Nigel, again, upstream company is very, very sensitive in terms of how crude pricing will behave, and therefore their sensitivity to earnings will depend on the expectations of how crude as a basket is expected to perform, not just for the next couple of quarters, but for the next few quarters as well. And it's very difficult to take a call in terms of how crude oil pricing can be. One can make a base case scenario of around 65, 70 as a bottom for crude pricing and 75, 80, 85 as terms of a top. But as they gyrate within this range, the expectations in terms of core realizations obviously vary for these companies. The second aspect also is that if there is significant movement, either on the upside or downside, you've got a high proportion in terms of either inventory gains or losses that come through on their balance sheet. And the third aspect, if crude remains low at a lower level, the accelerated costs of the capex that probably needs to come through probably just slows down a tad bit, and that probably impacts or might impact future earnings in terms of expectations of volume growth as well. Dividend yield extremely strong, but Nigel, the stock had also run up quite significantly over the past 1 year. So my own sense is that wait out for any decline on the upstream companies. You can take them as trading bets, as we always believe it.
Any thoughts, Mayuresh, on SW Solar? Stock is fell from 800, 820 to 550 levels, coming up, some repair there.
Afternoon, Prashant. No, so I think the entire pricing environment, when it probably comes to the end product pricing in terms of how solar tariffs are expected to behave, the panel costs and the expectation of how they are expected to fare as well. There is significant work that still needs to be done. I think China is still a big, big player when it probably comes to both panels, as well as expectations in terms of the input costs that are required to make the same. So I think it's a variable in terms of both these factors put together. Yes, it is corrected. There can be a dead cat bounce or a technical bounce that will come through. But in our opinion, I think power ancillary as a space, I think a few of the developers and a few of the EPC players probably look a tad bit more attractive. So Tata Power is something that we are keeping on our watch list. Within the EPC players, we've obviously got something like a Power Bank as an example that can probably do well for a long period.
Okay, all right, Mayuresh, we'll leave it on that note for this afternoon. Thank you very much for joining in. We have to start wrapping up a day that is ending on the lower side. Like I said, 200-point trading range, but we are closer to the low of the range than the high of the range. So with the Nifty ending, in all probability, below the 25,000 mark. So let's see where the weakness was. Trend has lost about 4% today, profit taking finally setting in. There are some of the auto names that have seen red as well. M&M down almost 3%, Hero Motor down 2%, Tata Motors has lost a little over 1%, iShares is down 1%. So the auto space definitely quite weak. Infosys saw a cut of about 2% as well. The other big names included the likes of Kotak Mahindra Bank on the way down. There was IndusInd Bank, ITC. These are some of the prominent losers in terms of today's action. Titan also losing a little over 1%. Nestle was down, so a couple of consumer names coming into the mix on the lower side of the screen. Talk about the stocks that managed to buck the trend. Some of the HDFC Group names have done really well. It's actually been a good day for the HDFC Group. HDFC Life is a Nifty winner with a gain of nearly 2%. HDFC